Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button. Subscribe if you already haven't. Give me a follow on Rumble. Just a little disclaimer, nothing said on this video or past or future videos should be construed as financial investment advice. Just my opinions and thoughts, and you can read the disclaimer more below. And let's get into today's stuff. If you watched my video yesterday, this is what I was referring to. First, I want to just do the manipulation and picking back. Yesterday's video is up. I don't know if it's up there or it's up there or there. You can click and see the end. But if you're looking at it, this video, see here highlighted, and it was just regarding the manipulation and how it makes people worse analysts. And if you look at this, this is a video. I was talking about commercial real estate, but this was February 20th, 2024. And just to show, you said gold will spike possibly up to 3K an ounce. Now, it said later this year. And so you just see this is in the comment. I've been saying this, and that's where it is commercial real estate. And of course, this was, and so I'm basically the only one who told you that gold's going around 3,000 now, and this was last year. No one else was willing. Like Salente said, there was a golden year, but he didn't put an amount. No one else said 3,000. Now Jordan said somewhere, Jordan Royburn 3,000 to 4,000, but that's it. So good for you. Good for Jordan. I think he did. No one else. Avi Gilbert said parabolic. A lot of permeables. But if I did the manipulation and I bought into that, I wouldn't have been able to make that call because there was a lot of things I was seeing in the buying areas. They were buying up. I think this was the fourth time it was going through 2,000. And so that was the first thing I was seeing. The other thing is just they were pricing in perfection. Around that time, they were perfection, Goldilocks. There was a lot of problems with companies talking about the consumer being bad. So, and interest rates, people were breaking, and interest rates had to be lowered. So there was a combination of worsening data, economics, among other sort of wild cards that had me going this. And if I believed the manipulation BS, I mean, like, oh yeah, they'll do some swaps and you just don't know. But the truth is, manipulation is an excuse to avoid accountability. I've had things right, I've had things wrong. My top market in the stocks, I'm not really, I was wrong on. I don't hide from that. I said somewhere about S&P to 7,000 and this happened today, so I thought that was funny. But I did say the bull market's basically almost over. So it's more of a trading and not investing environment, so I won't be surprised if we already topped in the stock market. So anyway, but there you can see February 20th, 2024. And you can tell by the comment. Now it didn't happen, 2024, but we're almost there. So let's get into the stuff. I talked about the data. If you look at it, the actual raw data, like S&P Global PMI flash, that's not in contraction, but it's pretty close to it. It's actually a little bit above. It's 50.4, which is still an expansion, but very meek. Uh, Composite PMI. And the service index is actually in contraction with the global manufacturing. Look at U.S. home existing sales. That was below expectations, minus 4.9%. That was not, they blamed it on home prices being too high. Well, what's going to happen when people start actually selling? And this is the main reason the market fell. Sentiment factors. If you look at this right here, Michigan consumer sentiment 64, way below 67.3. And they said the main culprit, which you heard me say earlier in this channel, we're going to get either bad data or inflation. Maybe we'll get both. But it doesn't really say anything about why here, but the good news is worsen outlook for inflation. This is the S&P. So that's what it is. It's now they're saying it's tariffs, but we've had inflation way before these imaginary tariffs that Trump's not putting in, or he's putting in then taking back. And then look at it. Additional economic data hinted at fading optimism. U.S. business activity growth came close to stalling in February. So there it is. Business expectations for the year have slumped. Of course, government policies. But a lot of this is baked into the cake. So let's see where the markets went today. S&P 500, if you look at it, the markets did not do all that well. Down 104 points. But if you look at it, it's still above the 6,000 mark. So I don't know if this means we're a crash or not, but still, this is above the 6,000 mark, so that's not bad. Look at the Dow. This is astronomical. The Dow is down 748 points. And if you look at it, looking at this chart here, starting at Thursday's opening, it's at 44. So it's had 44,604. Now it's at 44,176. So a lot of big down days. It's at 43,428. Yeah, so it started at 44,621. Now it's at 43,428. So two big down days in a row. So we'll see. And in terms of gold, this is more bull market, even though it's down, it was bull market behavior. Because if you look at it, it started 230, really went down, and then it came and the dip was broad. I remember it was up 18, 19 points. It was down 18, 19 points. It was really down. And then it almost like right here, it was a positive around 3 o'clock. So if you look at it, where's 9:30? It started off down, it went down, and then it really dipped down. It was down like $19, 18, 20, and then it basically part all those gain losses, and then it finished down like $6. But it's really doing that's good that the dips are being bought. Of course, Nasdaq that was down 438 points. So you look at it, this is not good for the stock market, but I don't know if this necessarily means a crash. As I said, I think the Fed will come in with QE, and that might be sideways, but it could be going down way more, and then there's another bump up. So who knows? Could be coming up and go down some. QE makes a double top, but yeah, this is not strong market, but this is good. I mean, if you look at it, this gold's definitely outperforming the stock market now. And I think that will be good for the miners going forward. So anyway, I just wanted to do a couple other things. So look at this, Nissan, which is a good car company. They have really good cards. Moody's cut their rating the junk. So we went over the layoffs ad nauseum. A lot of bad companies. We went over a lot of them, but now Nissan, which is a good car company, you can't say it's a bad car company. They are now in junk status and citing weak and worsening outlook. So Nissan, add them to the long list. You know, all the videos, watch the videos because they're cumulative. You'll see, look at this, cutting its workforce by 9,000 people global. Now, this isn't the US. Worse than expected performance in key markets, US and China. So, free cash flow has turned negative and remained red throughout the fiscal year of April. Wow. So, this is really bad. So Nissan, they're having troubles. So, and remember, if you remember what I was talking about, why are these baseball teams spending less? Why are these baseball teams spending less? Well, Stephen Cohn, if you don't know who he is, he's the owner of the New York Mets. He's talking negative on the economy. Now he's trying to blame it on Trump, tariffs, Doge. He doesn't realize, if he was listening to this channel, he would actually know. Maybe he does. He might listen to this channel. Wall Street, I know, listens. I'm not saying all, but I mean there's segments of them. If you watch that movie Dumb Money with Roy and Kitty, they scale the internet. So, I mean, it's possible he does. Maybe that's why he's saying it. Maybe he listens to this channel. It's very possible. So, anyway, he's turned bearish for the first time in a while. So, and, maybe other owners are bearish. Now, the reason why he's spending big, he has number one payroll, just signed Juan Soto. I'm a big baseball fan. He said money's not an object. He's going to spend all the money. He's a hedge fund manager. He can short the economy and still make tons of money. So he doesn't care. And he's a diehard Mets fan and wants to see them win the World Series. The Nats are going to kick their butt, though. So sorry, Mets fans. Anyway, more things. I mean, this is luxury home builder says more than 70% of their business is from wealthy move-ups and empty nesters with years of home price, and then rich millennials. So that's it. That's who's and there's not many. So right now it shows that, but this is the thing. When these people start suffering because business tanks, you don't think Nissan executives are feeling the hurt. That's when I think inventory is going to explode off the. But even it said, this is unless you're really rich, you're not buying a home. So that's why the market will eventually crash. But luxury homes, wealthy move-ups, empty nesters with years of home price appreciation. And then, yeah, rich millennials. So, anyway, this is just market sentiment I'm bringing. Oh, let's go back to the economy. Well, I'll get to that other one. Americans are missing debt payments as there is a recession. So let me look at this. I really like this. U.S. consumer delinquency rates jumped to 11.4, highest in 13 years. This was the great financial 13. Now it's at 11.4, worse than 2019 before the pandemic, and worse than it was in 2000 before the tech bubble. So now, granted, I don't know if that's adjusted for population group, but especially now, the middle and bottom end income bracket is where they're discovering. So, and then here's the other thing. I mean, GameStop was the exception, but retail investors are buying U.S. stocks on fastest pace. Mom and pop investors GameStop is the market. Institutional investors are selling as to retail as they chase record valuations. So look at this. Individual investors have underperformed the market for 3 years in a row. So anyway, I'm not gonna go dumb money. I think that's sort of obnoxious. But after seeing the dumb money movie Roaring Kitty, that was cool. So, but yeah, you look at this, and in terms of gold, I mean, I think it's only a matter of time before it hits 3,000. And my target is 3,500 to 4K. And then I think there'll be so much force majeure. It's not just that, too. What I think also, I really think they're revaluing gold to sell it. And then that will be that long, gated bear market in a lot of assets. So. Just my opinion, not investment advice. But yeah, I do think, I mean, you never know, because the people who run things don't, not a lot of common sense. Uh, I think every ounce of gold in Fort Knox, if there's as much as they say, or even more, should stay there. Because I think a default's inevitable, and they're going to have to back their currency with gold to restore more trust and value. I think that's what I think that would be part of the solution. But the other thing I want to get into, sorry, lastly, Bitcoin price today. Today, let me see, where is it? Was it up or down today? I'm gonna seeking alpha. I keep reading these mix uh Bitcoin US dollar. All right, so this is 1 year. Let's do 1 day. Look at 1 day. Bitcoin down 2.17. See the spider. 1 day, 1.17. NASDAQ. Qs. Let's do the Qs. 1 day, 2.08. So look at it. Did I share it? Oh, I'm not sharing. Sorry. So as you can see, 2.08 this is the Qs, the NASDAQ today. And then Bitcoin, let's see. Bitcoin ETF, it's down 4%. Bitcoin, where is well, yeah, Bitcoin did not have a strong day today. Let's see, did it really? Bitcoin price. So, like, I look at here and it's up like 338 today. And then let's go to Binance. All right, so yeah, it's down 2.13%, just like the stock market. If there is a crisis investing or a crisis Bitcoin, in any of these types of monetary revaluations or anything, Bitcoin, it will not rise with gold. It is more of a play on the stock market or the NASDAQ. So anyway, that's all. Hit that like button, subscribe if you haven't, and remember the disclaimer, not financial investment advice. I will see you next video.